Good afternoon, traders. This is Christian from Hertz Tribeca Trade Group with your end of day recap for Thursday, and a pretty ugly day all around. First things first, horrible tragedy in Barcelona. Thoughts and prayers with Barcelona right now. Just horrible whenever something like this happens, and disgusting in my opinion. Horrible situation. So let's just kind of go through the price action. A lot of things kind of came out today, a lot of which more from the administration about possibilities of I think their infrastructure committee was just disbanded after the close, but rumors about Gary Cohen, and then a whole bunch of other things going on. So let's just concentrate on the price action and what we saw today in option activity. It was very much like last Thursday. So if you traded last Thursday, and if you saw the price action as well as the option activity, it was almost exactly the same in terms of how many puts were bought versus calls. You could see I do have the option activity in front of me. So you could see for puts, it was about 12.4 million contracts versus 10.4 million calls. So that looks like a ratio over one. That usually doesn't happen very often. So this is a contrarian buy signal, or one part of it, I would say. Whenever the put call ratio gets to be that high. So, but there are a lot of other things going on. So, besides that activity, which again, it was just continuous put buying with IWM saw a colossal put buy today. I think it was $3.2 million going out to October. Should be on my list of put for, yeah, it was October 137 puts, 10,000 contracts. It was a $3.2 million trade, so absolutely huge on the beginning of the day on kind of the first wave down. Skew continues to be high. Option skew. I know some people look at that. It's been, we've had some false signals with this. Again, you have to realize what option skew measures. It measures the prices of out of the money options. So as those get more expensive, it just means that there's a higher probability of a bigger move that could be placing. There's an actual percentage once we get over 135. I don't have that in front of me, but it basically just means that the option market is in pricing at a bigger move. So that's been steadily climbing the last week. Now it did this back in March and April, and we really didn't have any volatility, maybe a couple days of volatility in April, but certainly not substantiating that. And notice that it's never really gone down below 125. It's kind of stayed elevated for all of 2017, but it is getting to more of an extreme level in skew. So I think you have to be cognizant of that. I have the Q's 1 hour chart up here because I think there was some clues. I always find some interesting levels to trade off of in the Q's. So what did we do yesterday? We failed at the top of value. So this was midday. This is as far as we got. It looked like we were starting to break out, and it failed. And failed right at our resistance level. So again, the value areas are very, very informative for drawing resistance and support lines automatically for you. So today, I didn't think that we were going to go all the way down to the bottom of value. It's a big move. We kind of hesitated here for midday, and then volatility continued to pick up. So notice that we haven't stopped here. So sometimes this happens, on these hourly bars, we break below it and we can recapture it. So this is what we did last week. We had a good guide last week, which was a VPOC that was taken out late on Thursday. And then Friday we came back. So I don't know if that's going to happen tomorrow, but it could be setting up that way. There's a lot of similarities between today's flow as well as the technicals. You could see that we were very oversold on the RSI. We got to a 15 RSI late on Thursday. We were doing the same thing. So it's a 15 RSI. So very, very extreme oversold on the 1 hour. We are not oversold on the daily. A member asked me, "Hey, but we're oversold. Should I play for a bounce tomorrow?" Well, while we're oversold on the short time frame, specifically the 1 hour, we're not oversold on the daily. We could see that we're not even close to being oversold yet, and I think same thing. So SPY finally got took a hit today. It is going down to the bottom of value on the daily chart, but that's not oversold really on the daily either. But we've got some support here. IWM is really the problem area. We have not seen a break of the 200-day moving average for a long time. So this is really, I would say, extreme caution here. As different things happen, I really try not to make predictions. Kind of tell you what the price is saying. A break of the 200-day moving average is a break of the uptrend. So you have to be very cognizant of that. I would say so. While there's a couple things that there's couple contrarian buy signals, this is not a buy signal. Again, you kind of fall back to that this is happening in August, which again everybody's talked about this. August, it is what it is. It's the week one of the weakest. August and September are the weakest areas or times of the year as seasonality goes. So it's proving itself right this year. So I think you just kind of have to be patient. I could just tell you what I'm doing. I can't tell you what you should do, but I could tell you what I'm doing and just kind of being patient and just waiting. I am trying to buy like a couple things, but extremely lightly to do that because we're just seeing too many things break down. Uh, so the transports, this is the Jets ETF. This is the airline ETF. They really got smacked around. Is it justified? This does happen when there's a terrorist attack. Usually, airlines and travel companies are one of the first ones to get hit really hard. So there's a pattern here. So we'll see if that holds. Same thing with transports. They're right at the whole transports. I mean, there was also rails were weak too. I'm in NSC, and this thing got smacked today, down 2.4%. So, there's other reasons for, besides not just the airlines were going down, and I'll leave it at that in that space. And then you look at the banks, and the banks look horrible. So KRE, the regional bank ETF, has broken the 200-day moving average. Again, it's not in an uptrend anymore. That's what the 200-day moving average is there to tell you. There is some support here. I think if it breaks, have to be very careful here with these banks. If it breaks this line, it's in danger of taking out this whole November rally. So be careful of that in the banks. I have no financial exposure on. I don't think I've got no financial exposure on. I've got no energy exposure on. So that's the other thing is these things break down. If you want to short, I think fine, or to put some shorts on here. But at the very least, I would not be personally, I would not be long anything that's underneath that's just breaking the 200-day moving average. That is a clear sign to run for the hills. So you can short, or I can short at that 200-day moving average, or I could just make sure I do not have any positions at all. That's how one gets hurt in this market. So, all right, that's enough negative, I would say. The positive for option flow today, there was a few call buyers and some things, but the call buying really dissipated. It was mainly the call buying in the VIX, but we did see some more of the fold. I talked about this name yesterday. It just kind of succumbed to the weakness today with biotech got smacked again. So this name was doing very well, and then really, um, got taken to the woodshed with everything else. So, how I kind of play with use some strat. Sorry, I'm not saying this the right way, but using strategy for some of these option signals that we see. Some of these you don't have to go into right away, especially when there's a lot of volatility. You kind of just write them down like I do and say, oh, okay, this was interesting. They came in a couple times now and fold. They bought January calls. They bought October calls. This was yesterday, and today they bought October calls again today aggressively. So, January may be the best kind of environment. That's what I'm in. I'm in the January calls. I'm also in the stock as well. A couple other things that caught my eye was Salesforce. Salesforce does report earnings next week, so maybe a little bit of pre-positioning going into their earnings. They had a great day yesterday. In fact, a lot of software companies or application software companies, I think they call this group, did very well and looked like they hit a 52-week high yesterday. Is it a false breakout? We'll have to see. More than one day of price action, but pretty ugly to see a breakout and then a move back. The ETF that I use to kind of track this whole group is IGV, and you could see a nice day yesterday and it completely taken out, down 1.7%. So ugly. Silver. There were some silver calls. It was a pretty small order in silver, but same thing. You have to look at what we're doing here in silver and gold. Silver's right at this 200-day moving average, so it's getting close. If you look at gold, I've said this for a while now because this thing is so damn choppy. But we've seen call buying just about every day for the last week in GLD, the gold ETF. So you could see, for example, for today's flow, all on the call side and a lot of sweeps. So sweep opening. Oh, this is puts. Oh, there was actually a couple put orders. Oh, look at this at the end of the day. But for the most part, it's been calls. Let's see this one. This one is a call, short dated. Huh. So interesting. The flow kind of turned around a little bit there. For me, I'm waiting for a break above 1300. What was odd today was that the gold miners were flat today. So they are above the 200-day moving average, but they've stalled out here before. Here, 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 here. We'll see if they're going to stall out again here. I am long GDX as a hedge. Also, the utilities and consumer staples didn't perform well today either. XLU was down 70 basis points, so you can't hide here either. XLU made a 52-week high yesterday. Consumer staples, I thought, was starting to look very constructive here, and they got squashed today. So it looks like just broad selling, what that means. Indiscriminate selling across the board. Bonds were also bid. This is also trying to get out of this range, which has been just basically a big chop zone for bonds. Not a place that I've really been playing a lot. And then I'm sorry I didn't talk about the VIX today, but a similar spike up to what we saw last. Here's Thursday's candle. This is today's. I mean, they almost match each other perfectly. So one other order that caught my eye, for single stock stuff was NTNX. This thing got an upgrade today. It does report earnings, I think, at the end of the month. So again, a tough candle today, but somebody once it got this thing was up like 5% today, so it closed flat. So I think someone took advantage of this right at the end of the day and said, "Hey, I'm buying calls on this." One other note, so I'll leave it here, but Applied Materials earnings, while earnings were bad yesterday, I think every name that reported earnings after the close yesterday fell pretty hard. Today it's a different story. Applied Materials, we did see some put buying going into Applied Materials, which I wanted to play this to the long side in decent size, but I ended up just taking a small position because we saw a lot of put buying. But really, really strong quarter that they put up in Applied Materials. So again, there's some things that look pretty ugly and bearish. There's other things that are saying, that things are pretty good in the business world. Ross Stores hit the ball out of the park in terms of their quarter as well. Even Gap was up today, so on earnings. They did their guidance was weak, but they did beat their quarter pretty handily. But they said that their guidance is going to be weak. But so we'll see. Tomorrow's Deere. I'll tell you, I went long Deere. Looks like it's up, which I thought it reports tomorrow, but I did go long Deere for earnings. Yeah, I don't see Deere coming up with earnings, but it does look like it's bid after the close. All right, so that's it. So when you have mixed signals like this, I think you just want to let the volatility play out and then see where the dust settles. Considering again, it is what it is. It's August and it's a seasonal. So, if you're trying to go long here, big, you're really going against the wind in terms of the seasonality. So, that's a known thing that August and September, and everybody knows it. Everybody's talking about it. How these are weak months of the year. But if you've got a longer time frame, or if if you have patience and you can kind of see this through, maybe some of these things recover that seem to be breaking down a little bit. But it's too early to tell. So for now, we'll watch and see how the price action turns out to be tomorrow. Have a great night, everybody, and see you tomorrow.